I just want to say thank you if you've left a comment underneath these videos. I reply to every single comment that's left, and I really do enjoy this interaction. Now, by leaving a comment underneath the videos, you will be entered to win some pretty cool prizes. Take a look underneath the video and see what there is. There's some really neat stuff that can be won. Now, I've got a brand new trading system for you today. This is not the Ribbon. This one is called the Forex Money Bounce. So this is the second free trading system for you. Now, we're taking a look at a theme here. This is the equilibrium theme. I really do want to hammer home how important market equilibrium really is. Yesterday, or in the last video, we used this little boat as an example of equilibrium, how a boat can move over to one side and then just pop right back up again. Today, I'm going to take this to much bigger levels. So big, in fact, that I can't show you with a boat. I have to show you with a picture. So this first picture demonstrates equilibrium using a planetary scale. So we've got a moon and the Earth. Now, the moon revolves around the Earth in what's called an elliptical orbit. It will get away from the Earth and then come right back. And as it comes back and it's closest to the Earth, it has found its equilibrium. From equilibrium, it gets shot out and then has to come right back again. Now, that is the moon revolving around the Earth. We can go even bigger. We've got the Earth revolving around the sun. So here, Earth is at equilibrium, and here, the Earth is overextended. So we can go as small as we want. We can go to an atomic level and see equilibrium behaving there. We can go to nature and see equilibrium behaving there, or we can go to these astrologically huge bodies and see equilibrium working there. Now, again, I've got a brand new trading system for you. It's called the Forex Money Bounce. So let's go to the Forex Money Bounce charts and we'll take a look and see how equilibrium is working in the markets. So what we've got here is a chart of the Forex Money Bounce trading system. This is what we're looking at right now, Forex Money Bounce. And the way I like to look at this one, we're taking equilibrium to another level here. We're looking at equilibrium with a bias. Now I've got three different moving averages on the chart. We've got the 100, which is the red, the 50, which is the gold, and the 20, which is the green. Now these are all exponential moving averages, but I want you to notice how the market is drawn into this 20 EMA. We have the market rising and then pulling back into it. Now we've got the market dropping and pulling back into it. It's finding equilibrium at these levels. And then from there, it's moving on. It gets to equilibrium and then takes off. So this is equilibrium with a directional bias. We have a good idea where the market wants to move after it gets to equilibrium because of the different moving averages we're looking at. We're looking at the market getting to equilibrium, and then we're looking at the price oscillator, this red and green histogram underneath, for a trigger. We're looking for the signal that we need in order to take a trade. So without any further ado, I would like to now go right into the rules of the Forex Money Bounce trading system. Now, this name is going to really speak for itself once you understand how the system works. We are looking for a trend, and then we're looking for the market to bounce in the trend direction. And this is going to yield us quite a profitable string often. We're going to get quite a few consecutive winners. The losses are going to be fairly small. This is really quite a nice system. And I'd like to get right into it and start to show you the parts, the components, how it works, and what the rules are. Now, this isn't going to take very long. I don't want to waste too much of your time at all. I know your time is valuable and you've got things to do. So let's get right into it. I'm going to go as quickly as I can, but make sure I cover all the bases. I want you to get into this and start trading this right away. All right, the Forex Money Bounce. This consists of essentially two basic indicators. We've got a series of three moving averages. We've got a 20 EMA, a 50 EMA, and a 100 EMA. Now, these moving averages serve two purposes. They give us the direction that we want to trade, and they give us the setup. So we're looking for a certain direction, and we're looking for a certain event in order to proceed to the next step. And the next step is underneath here, we have a price oscillator. The price oscillator, what it's going to do for us is give us the actual entries to either place a long or a short trade. We're going to couple the entries with the 20 EMA on the chart, but essentially this is going to give us the go ahead. This is going to give us the signal that we need. Now with the price oscillator, we're looking at the color of the bars, not necessarily whether they're above or below this flat line, this zero line here, but we're looking at the color. We're looking for red to initiate a sell trade. And we're looking for green to initiate a buy trade. Now it's important to note right off the bat that we're not taking every single red and green bar that comes along. As soon as we get a red bar, we're not looking to sell. As soon as we get a green bar, we're not looking to buy. We're going to couple this with the moving averages. With that being said, now let's get into the rules. And as we explain the rules, as I get into the rules, I'll also explain the different steps, the purposes of the different indicators. Now, the first thing we need is a setup. Now we've got the setup, then we've got the signal, and then we've got the actual trade itself. So what we're looking for is initially the setup, and that is going to be step one, these moving averages. We want them to be in a trending order. Now, in order to look for a long trade, we want to have the 20 EMA above the 50 EMA and the 50 EMA above the 100 EMA. So we want the smallest down to the largest. This shows us that we have a trend. Now, this uptrend happens right here. On this cross right here, where we have the yellow crossing above the red, all the moving averages come together in the correct order. Prior to that, they're out of order. They're not in order. So we're not looking at any kind of trend in this area at all. On this one, it'll probably be this little white candle here. When this white candle closes, the yellow moves above the red. The green is above both of those. So now we've got an uptrend. When we have that uptrend, we need the price to start out above it. So we have all the moving averages in order, and then the price is above those moving averages. All right, so we've got that going for us. The next thing is we need for the market to come back and touch this 20 EMA. It has to go from where it is above all the moving averages to reversing and coming back and touching. This is a pullback. So we're looking for the market to do its zigzag dance, as it were. We need the market to pull back and touch the 20 EMA. Now, it can touch the 20 EMA exactly and then move off, or it can get down below it a little bit. Doesn't matter. As long as we get the market to that 20 EMA and the EMAs all stay in the correct order throughout this process, then we're okay. All right, so now we've got the market trending. The prices pull back, touch the 20 EMA. The next step is we want the price to close back outside, or in this case, above the 20 EMA in the trending direction. We want the price to close above the 20 EMA and have the histogram bar turn green. When the price pulls back, these price oscillator histogram bars are going to be red. We're going to have that red series of bars as the price is doing its pullback. And in order to trigger a trade, we are going to be moving in the direction of the trend. Price is going to close above the 20 EMA, and the signal, the confirmation signal, is going to be when that histogram bar turns green. So I'm going to mark this off on the chart here. And we get that on the same candle. Now we may get one candle, two candles that pass, and then we get a green histogram bar, or we may get one or two green histogram bars and then a candle that closes above. It's okay. Ideally, they're going to happen on the same candle, but it's not always going to be the case. Sometimes we're going to be delayed by one or two. Whatever the case is, as long as we've got both a close above the 20 EMA and a green histogram bar, we're okay to go long if we are in a trending direction. So at this point, we have the signal. This white candle will close. We've got the green histogram bar. We will place an order to buy, to go long at the close of this candle, and our stop loss will go just underneath the most recent swing low. If I mark these off on the chart, Maybe I should thicken these up just a little bit, just so that we can see them better for the video. All right. So now we've got our entry. We've got our stop loss underneath the most recent swing low. The best target is going to be 1-to-1. Now, a lot of the time, we are going to get these very small stop losses. So going for a 2-to-1 target, if you're a little more aggressive, is perfectly reasonable. A lot of the time, we're going to get a move that is 2 times greater than our stop loss. So what I'll do is I'm going to turn this one green, just so that we can emulate the platform. So we've got our entry, we've got our stop, we've got our 1-to-1, got our 2-to-1, and that is the long trade. All right, so let's do this again. Take a look at a few examples. And you're going to find with this system, these examples are not hard to come by. We are going to find them over and over again. They're everywhere. Once the market is trending, then we have a market that wants to move in a certain direction. And it's going to keep moving in that direction until it basically stops. And once it stops, the price will not be over the 20 EMA anymore. So the next example, so we take this trade, we get our 2-to-1. All right, we're up, we're doing good. So the trend is still intact. So we're going to be looking for another trading opportunity. And once this trade starts going or the market starts moving, we've got moving averages that are in order. We've got the price above the moving averages. So we're looking for now the price to come back and touch the 20 EMA. And this little white candle does that. It touches the 20 EMA. Once we get a touch to the 20 EMA, we're going to look for 2 different things: a close above the 20 EMA and a green price oscillator histogram bar. And on this very next candle, we get both of those things. Now, I wanted to take just a moment and mention that this Equinox price oscillator for the money bounce system does not repaint. These signals look really nice and clean, and this really is just how this works. This price oscillator is a very accurate trading indicator. It does not repaint, so the signals that you see now are signals that will have happened in real time. All right, so let's move on. We have all the requirements met for a long trade on this particular candle. Price has moved up, come back to touch the 20 EMA. The EMAs are all in order. The histogram bars were red. Now that on the close of this one, it's turned green. So we are looking for a long trade. So we're going to place our long trade on the close of that candle. Going to turn this one red so it closely mimics our stop. All right, so we've got our stop underneath the most recent swing low. So I can give it a little bit more room. All right, and a 1-to-1 profit target. And if you're a little bit more aggressive, we can go for a 2-to-1 profit target. And there we go. Entry, stop, profit target number 1, profit target number 2. Now, you're not always going to get profit target number 2. You're going to get profit target number 1 more often than profit target number 2. But this depends on your trading style. If you don't know, if you're not sure which one to go with, then I'd go for the 1-to-1. All right, so I'm going to get rid of these. Let's take a look at what else we can see. All right, so this trade goes, and we get our money out of this one. So then the next thing happens is, again, price is above. Moving averages are in order. Price touches the 20 EMA, and then we get a close above. And this one does not trigger because we have a little red histogram bar. Now this next one gives us a tiny little green histogram bar. You could take this. This could be a trade you could take. Now this one we may get stopped out on. It is very possible depending on how close your stop loss level is. If your stop loss is really close to the low, this would have triggered your stop. If your stop loss is just a little bit wider, we may have gotten away with this one. Whatever the case is, you could have entered this long trade and stop loss goes underneath the most recent swing low, and then the price wants to take off. Again, in this instance, you may have been stopped out. Now, what else happens? Well, let's say we did get stopped out on this one. Price is above, closes below, and this could be part of the same scenario here. Now we get a close above the 20 EMA. All right, so we were below, we close above, moving averages are in order, and on this one candle, we get another green histogram bar. Now this green histogram bar is below the zero line. That doesn't matter. It can be below as long as it's a green color. That's all we're looking for. All right, so we get that. Enter on the close. Stop goes under the most recent swing low. We go for our 1-to-1, and possibly we go for our 2-to-1. 2-to-1, is that it there? And that looks like we may have been taken out in profit with the 2-to-1 on this one. And this brings me to a good point here. Trade management. If you're going for a 2-to-1, when the market gets to your 1-to-1, now if you've got a 10 pip or 20 pip, or what's this one in this case, we're looking for a 50 pip stop loss. Once the price gets 50 pips into profit, I would take my stop and move it to break even. So if you don't get to your 2-to-1, you're not going to lose on the trade. I'd hate for the market to almost get there and then you actually lose money. So once you get to 1-to-1, I would take my stop and move it to break even. Okay. So I think you've got the long trades sorted out. Let's take a look now at some short trades. We're going to see that we want the moving averages to be in order. We want the price to be below those moving averages. And then we want the market to come back up and touch those moving averages. So in this case, we have a market that's changing direction. So in this region here, we do not have a trend. We've got the 20 EMA in between the 50 and the 100. Here, we have the 100 EMA in between the 50 and the 20. So we've got some transition going on. This is a transitional phase here where we don't have a trend. Now, our trend starts here when we have the 50 cross below the 100. So at this point, we've got a technical downtrend. So we could start looking for shorting opportunities. So what we've got is a trend that has taken hold. We've got the price underneath the moving averages. And now we're looking for the market to come up and touch the 20 EMA. And we get that with these two white candles here. Price comes up, touches the 20 EMA. So from there, we're starting to look for a shorting opportunity. And that's going to happen when we get both a close that is below the 20 EMA and a red histogram bar on the price oscillator. And that occurs on this gray candle right here. So we've got a downtrend intact. We've got a close below the 20 EMA, and we have a red histogram bar on the price oscillator. We can take a short trade at the close of that candle. Our stop loss would go above the most recent swing high. So there's the short trade. And then we would go for 1-to-1, or we could go for 2-to-1. If you're an aggressive trader and you want to get a little more out of your trade, 2-to-1 is always a great idea. Again, when the market gets to your 1-to-1, move your stop loss to break even, just in case the market does not get to your 2-to-1. I would hate to lose on this, especially when we were ahead. All right, so that is your short trade. Now, this one worked out really quite nice. I want to take a look at a different currency pair and a different time frame. What time frame were we looking at here? The previous one was 4 hour. This is a 1 hour. This works on the 5 minute. It works on the 15 minute. It works clear across the board. So we have a technical trend, technical downtrend that happens here, not here, because we are looking at moving averages not being in the correct order. And then here we have the 20 move below the 50. The downtrend is now intact. So we're starting to look for shorting opportunities. So we have a signal to go short here. price is below the 20, pulls up to touch the 20, it does that on this white candle, and then we get the close that happens below the 20 EMA. The EMAs are still in order, and we get the red histogram bar on the price oscillator. Short at the close, stop loss over the most recent swing high, take profit 1-to-1 if you're more aggressive, 2-to-1. Now this one would have stopped you out at break even. We did not get to the 2-to-1. We did though get to, pretty close to it, and it reversed and got to our entry level. So this one may have stopped you out at break even. Now, alternatively, because we are in a downtrend, the definition of a trend is, let's say the definition of a downtrend is progressively lower highs and lower lows, which means that if we start with a swing high where we place our stop loss, that whatever stop or whatever swing highs occur after this should not be as high as this first one. And what we get are progressively lower highs. So as this trade progresses, we could just use these swing highs to manage whatever trade we're looking at. Now, this is up to you. If you just want to go with the 1-to-1 route, that really is the simplest way. This is a little bit more advanced, but this is up to you. The signals are there. The signals are clean, and they're going to be pretty much everywhere you look. Once we get a trend, then we are looking to trade with the market. We're not going to fight the market, and we're going to get trade after trade. So we have a short trade, stop loss, short. We have a short trade. We have a short trade. Stop loss just goes above the recent swing high. This could be a short trade as well. Now, a lot of the times you're going to notice that we are going to get several opportunities to take a trade. If you miss one, sometimes right around the corner, there's another opportunity. And we see that here over and over again. If we had missed this short, we had an opportunity actually right here to go short, followed by an opportunity to go short here. We had 3 chances to go short in the same area. We have that same scenario here. We have an opportunity to short, 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 short. We got 4 opportunities to take a short trade in this one area. So if you've missed one, the next opportunity isn't going to be too far away. All right. So we have another opportunity to short here. Price comes up, touches the 20 EMA, closes below. We get the red histogram bar. All right. So you notice we're not taking any shorts in these red histogram bars. We need the price to get to the 20 EMA. This one doesn't happen. So this one is the signal to go short. Now this is a losing trade. This one doesn't go in our favor. We enter on the close of this candle. It doesn't go very far. I don't think it even goes 50% of what our stop loss does, but it does turn around and it takes us out. So out of all of this, we have 5 or 6 different trades that work out. And of course, you get the odd trade that doesn't. Nothing's going to win 100% of the time. So it's important to see when a losing trade does happen. But we're going to get way more winners than we have losers. We're trading in the direction of the trend. And when that trend is intact, that market is really going to want to move. Now, this is the pound Japanese yen. You can take a look at all the different trading opportunities we have in this streak here. This is huge. Right from... So you have to zoom out even further to see the whole move. So the trend is intact from here, and it stays intact all the way up until here. And we're looking for long trades throughout this entire movement. So we have opportunities to go long in here. We have opportunities to go long here, and again here, which this one admittedly didn't work out, We can go along here. Actually, we can go along here. We can go along here. Another long trade here. Another long trade here. Stop loss underneath the recent swing low. Finally takes off. There's another opportunity here. One here. So I think the point that I'm getting to is that you don't have to wait very long for an opportunity. And if the market is trending, we are going to get several different opportunities. Now I can do this. There's going to be dozens of trades throughout this move in here. And most of them are going to yield at least 1-to-1. A great deal of them are going to get us 2-to-1 or even more. So again, if you're confused or you're not quite sure which target to pick, then you go with the 1-to-1 because that is the one that is most likely going to get hit. If the market is going to go as far as 2-to-1, of course the 1-to-1 has to get hit first. It's got to go past that barrier. But if the market doesn't get to 2-to-1, it's generally going to get to the 1-to-1 and then turn around at some point. But whatever the case is, if you're not sure which one to choose, always go for the 1-to-1. You are going to do very well with this. Now, you're going to win more than you lose. Again, simply because we're looking at bounces off of a trending market. We have this 20 EMA price is going to bounce off of that 20 over and over and over again. And in the case of this pound yen, where we see that the trend is really strong and it just keeps going and going and going, we're going to get several opportunities. And then from there, we're just making money. Now, this is a short area in here. Between here and here, we don't have the market in a trending direction. Between here and here, we still don't have it in a trending direction. This is when the short trend occurs. We get that in here. Now we're looking for a short trade. Price gets to the 20 EMA, but we don't get any red histogram bars. We don't get a short trade in here. Now that brings me to this section here. There are periods of time where you don't want to trade, and that is going to be in this section where the moving averages are out of order, or when the market has started moving sideways and has crushed all the moving averages together. Once these moving averages start getting really close together and we don't see that separation anymore, then it's moving sideways. The reason we don't see that separation is because the market is undecided and it's just going sideways. It's range bound and it's not something that we want to trade. Once the market starts to move again, these moving averages do separate. And once we get that separation, then we can start looking for a short trade. And we get our signal to go short here. And we easily get 2-to-1 out of this. So trading with the trend, really good way to go. Bouncing off of the EMAs once they are in order. Also, a really good way to go. The price oscillator indicator gives us really timely indications as far as signals go. So you put all of this together, you've got a really easy to follow, profitable money bounce trading system. I want to thank you very much for watching this video. I really want this to be a success for you. I want you to become successful. You are putting some time, some effort into trading. And I hope that this money bounce system takes you one step closer to achieving your goals as a Forex trader. Again, thank you for watching. I'm Russ Horn, and really take advantage of the system. It's good. It's going to do well for you. Thanks again.